Hi, I'm Jim Gosart with Republicans Overseas.
And I'm John Richardson, working with Republicans overseas.
John, you and I have been talking about this issue that's very recent in the news. Today is August 29th, and it's regarding the proposal from the Harris campaign to raise corporate taxes from 21% to 28%. And I think, and the topic is, look, what's missing in this whole discussion is what is the impact going to be on American-owned, particularly American-owned small businesses abroad? As always, it seems like the impact on Americans living abroad is rarely taken into account. And this is a case here. And if this tax goes through as expected, it's going to really hurt small business. But John, how does that play out exactly?
Well, Jim, this is one of the best arguments for severing citizenship from tax residency that I can think of, because not only have people not considered the impact of this on American small business abroad, but most people would say, what are you, out of your mind? We're talking about raising corporate tax rates in the US. How in the world can that possibly flow through to small businesses of Americans abroad? That's nuts. Wrong. And the reason, of course, is because of US citizenship taxation, but in a very general sense. Let me, as the great trial lawyer Jerry Spence would say, let me explain you. Okay, so basically, we all know about guilty, right? Which, with a deliberate attempt to oversimplify, simply says this: that if a US citizen owns 50% more of the shares of a non US corporation, then the income earned inside the corporation will be taxed directly to the individual, even if they never received it, right? So let's say that you're a US entrepreneur abroad, you've got a corporation, makes $100,000, and you say, well, I want to leave that money in the company to invest, expand my business, make myself more competitive. US tax rules say, not so fast, buddy. You know why? Because we're going to say that that money earned by the corporation, even though you never receive it, you know what? You're going to have to pay tax on it personally. Okay? Now, that's basically how the guilty rules work. Now, leaving aside the technicalities, the good news is that there's something called a high tax exclusion, which means simply this: that if you're running the business in another country, I'm just going to make up a country, why don't we say Canada? Okay. And if in Canada the corporation is taxed at a rate of 90% or higher of the US corporate tax rate, then you know what? Then that income that normally would be subject to these horrible guilty rules, we're going to exclude it from guilty altogether. In other words, it's okay, carve out for you, you're on your merry way. Now let's think about that for a minute. So at present, the US corporate tax rate is 21%, and 90% of that is, I think, 18.9%. So that would mean that if you're in Canada and you have a small business corporation, as many people do, and the Canadian tax paid on the corporate level is higher than 18.9%, you know what? You're free. You're free of the guilty problem. But let's look for a minute at what happens if the US corporate rate goes to 28%. Well, 90% of that, I think, is 25.2%, I think. Okay, but the thing is, Jim, 25.2% taxation is not 18.9% taxation. In other words, see where this is going?
I certainly do, John. It's scary. That marginal difference between 20 and 28% goes right at the small business owner, the American small business owner, trying to have a successful business abroad. And not only that, his competitors probably aren't going to have to pay that crazy tax, but the Americans will have to. Now, how are you supposed to have a successful business if all of a sudden you turn around, your tax goes way up, and your competitor's tax doesn't? I think it's going to be, it's hard enough succeed as an American small business operator. I know I did it in Hong Kong years ago, and I got clobbered by the first wave of guilty, what was called the transition tax. But this one, John, what's crazy is nobody's talking about this angle of uh, of the impact on American small businesses abroad. Everybody's like, wow, tax is going to go from 21% to 28%. Those big corporations, they need to pay their fair share. Well, you can find a situation where American small businesses, a lot of them are all of a sudden going to find their corporate taxes are going to double because of they're going from the excluded rate to 28%, and bingo, they're going to get it right in the kisser.
Jim, I agree with you 100%, but it's really interesting, to hear the way you describe it because, so you're a small business owner in Canada, or, in your case, Hong Kong, or, anywhere in the world, obviously. And what I thought was interesting was that you described that as your tax is going up. See, really, from the point of view of a small business owner in Canada who's competing with other small business owners in Canada, their tax rate in Canada doesn't change. What's happening here is the U.S. is imposing an extra cost, right? I don't know that it's so much
Right.
I mean, you can call it a tax, but it's really a cost of being an American, right?
Yes,
It's
it
like,
absolutely
you
is.
have a seminar, franchise seminar, a small business seminar. How many would like to invest in this business? Put your hands up. And then they say, everybody except Americans in the room, lower your hands. So the Americans keep their hands up. We want you to know that, you've got extra costs. You've got extra business costs, okay? Just understand that before you stay in this seminar, right?
Yeah, and John,
I mean,
I keep coming back to the fundamental point that we've been making: is the only solution is to sever citizenship from tax residency, to repeal citizenship-based taxation, unless the whole basis of taxation of Americans, that citizenship-based taxation, unless that is repealed, every time there's a change or a proposed change in tax laws, the chances are very, very high that there's going to be unintended consequences on Americans abroad. And it never seems to work out in our favor, John. It always seems to be we're the ones that get hit right between the eyes. And here's a perfect example of that. And I would have to say, those of you who represent the various groups representing the interests of Americans living abroad, a lot of organizations out there. I can't urge you enough. Get behind and support the Republicans Overseas proposal to end citizenship-based taxation. Just get behind it, support it, register to vote Republican, vote Republican. It's the only chance we have right now to make a meaningful impact on the tax situation of Americans living abroad.
Jim, I think that's absolutely right. And, you can tell everything about a country by looking at its tax policy and the direction it's going. And the general problem here is that the U.S. is clearly moving towards a tax system where things are taxed that were not realized income, right? And just think of the incompatibilities of this generally with a U.S. citizen living abroad. Because if, let's say that in this particular case, if Americans abroad pay the guilty tax the way it's written, okay, they're absolutely subject to double taxation, right? Because they're first
No
subject to
question.
taxation by the U.S., and then years later they pay it out. They're subject to taxation again. U.S. citizenship is practically a guarantee of double taxation because of this stuff, right? But anyway, um, you're absolutely
Well, and
right.
you've
The
just
only
and John, you've just teased another video for us, which is going to be on the topic of the taxation of unrealized gains. Probably a
Yeah, I
good
think we
good
should
good
talk.
place to wrap. What do you think,
All right. Thanks.
John? Excellent discussion.